You can begin filing your federal and state taxes today. CPA Kimberly Washington joins us now with some tips to keep in mind this tax season. Good morning.
Good morning.
All right, so let's back up for just a second because last year, even though the vast majority of people got a tax cut, some people hadn't changed their withholdings and they wound up owing money even though they paid less. So by now, that should be taken care of.
Right. And if you still fall in that category, you can actually go to irs.gov. You want to take a look at the new W-4 and complete that. And also they have a great IRS withholding calculator. You can put your information in there, and then that way you can determine whether or not you can break even or you get a refund at tax time.
So if you adjust the withholding, most people would get a tax cut under the new tax law.
That's correct, yes.
All right, so our deadlines are a little bit different. In many states around the country, all the taxes are due on April 15th, not in Louisiana.
So not in Louisiana, the taxes are due May 15th, and so many people
for the state taxes.
That's right, for the state taxes. So in Louisiana, state taxes are due May 15th. So many people may not be aware of that. So you want to be aware of the different tax due dates.
Are the extensions the same though, or are there differences? You know, what do people need to know about, okay, I'm filing an extension Fed, does that just automatically take care of Louisiana?
No, it doesn't. You want to make sure that you file an extension for Louisiana too. And a lot of people may not be aware of that. Now we'll extend the time for the state of Louisiana until November 15th, an extension for your personal tax returns until October 15th.
What's the biggest mistake people make?
I would say especially with the tax due dates. Many people may not realize that, especially if you have a partnership or S corporations, those tax returns are due March 15th. Personal tax returns and corporations are due April 15th. And so a lot of times people don't realize those differences.
You know, one of the things that's about, I say the new tax law, it's been in effect now for the second year.
Yes.
But for people who are, you know, still getting used to that, a big difference is itemizing. Is so much different. There's a much larger personal deduction, which is affecting how people or whether they itemize.
That is correct. The standard deduction has increased greatly, so many people aren't itemizing anymore. So you may not need to keep hold of all of your different receipts as it relates to charitable contributions, mortgage interest, things of that nature. And it's simplifying the tax returns for many people.
I think the mortgage interest part of that is fascinating. There's a whole group of millions of Americans who always took the deduction for, you know, the interest on their home, and they're finding in some cases that the basic deduction means they don't do that anymore.
Right, they don't have to file as far as their different itemized deductions. Standard deduction is a little bit higher this year, so of course that's one way that many people are going.
So if you're in that category, it's very important, I imagine, to know, okay, under which of these do I do better?
Right, that's correct. So you want to calculate, of course, your itemized deductions, and you want to compare it to the standard deduction. Keep in mind it does differ as it relates to your filing status as single, married, and also head of household.
All right, Kimberly Washington, good advice, thanks. 7:50 now, and Bruce says it will be sunny.